today.
Yeah, absolutely. Taher Badshah is with us. He's Chief Investment Officer Equities at Invesco Mutual Fund. Taher, great to have you with us here on the program. Thanks very much. How are things looking? I mean, so far, there's been kind of two steps ahead and one step back, which is okay, given that globally it's been one step forward and two steps back. So we are still outperforming in that sense. Are things coming to a head in a positive way now? Globally there is a bit of a clamor now that maybe the Fed has already done too much. It should wait, assess the impact of all of what it has done to feed through, and then do more. It's starting. I mean, prominent economists are saying, even some Fed officials are hinting towards that. What's your sense, Taher?
So yeah, there's been a fair bit of interest rate highs that we've seen in the system, but concomitantly we've not really seen as much of inflation decline come along with it, especially as far as the developed markets are concerned. So to my mind, I think while there is a growing clamor from different parts to kind of slow down in terms of rate hikes, etc., and give the economy a little bit of chance. But I don't really know whether this will satisfy the central bankers adequately to actually pull back at this stage, and especially if right now they're battling a consumer who is very strong and resilient, and if they were to probably relent at this stage, there's a reasonable chance that inflationary tendencies might once again creep back, and I'm not too sure whether they want to kind of risk that at this stage of the tightening cycle. So I would like to think that this is maybe something which is still in continuing mode, even though the market might probably want to think otherwise. They've seen some bit of meanwhile the softening of some of the economic parameters, and maybe that is something that they would like to see some more of it before they actually back out.
Okay, Taher, hi, good morning. By the way, let's just pull out the financial nifty. That index is up 2.3%. Just to give you some perspective, 17,500 call on the financial nifty is up 800%, 8x. That's the amount of short squeeze that you have once you have this kind of a gap up. Taher, morning. So banks are leading it, at least the last round of run. Do you think that leadership is firmly back with the banks?
Well, I think we've seen some part of it play out in the course of 2022 after a long gap, and I'm hoping that it continues, because that has been one of our important sectors, that we have been betting on for quite some time. And it's most of the things are playing out well, except for the fact that we've, as you know, we've seen deposit growth trail credit growth for a fair bit now, and that is something which probably is something to be watched out, at least as far as the profitability of the banks is concerned. So I think barring that, I think we are reasonably fine as far as the financial sector is concerned. Even though I kind of worry at the margin that our rate cycle might probably incrementally is looking like being a little higher than what we started off believing 6 months or maybe at the start of the year. So that risk apart, I think more or less the banking sector looks fine to me.
Okay, look at the market. It's now up and away, 300 points higher, triple century on the Nifty this morning. The sensex is up over 1,000 points. A rebound was expected, but the ferocity of the rebound, I'm sure, has taken everyone by surprise, especially on the upside. The bank Nifty now inching towards almost a 1,000-point up move. Taher, hi, good morning. I wanted your thoughts on the auto space. Kotak put out a very interesting report where they spoke about the scope of improvement for India, right? Because auto penetration is still so low. Only 24 people out of 1,000 people have a car in India, compared to, say, 600 in Italy and about 300 in America. Of course, it's not an apples-to-apples comparison, but do you think that there's still more to go in this auto sector upside? The stocks have already gained about 30-40%. But what are your thoughts now?
So pretty much, I mean, we like it from a structural perspective. We know that there is under penetration, especially in some of the segments of the auto market. It's also a sector which is reasonably well placed from a cyclical standpoint, but very tactically, I think it has done a little bit of stuff that it was that was expected out of it at the start of the calendar year, or maybe towards the end of last year. And to that extent, this is a market, Sonia, as you know, we've had some very ruthless sector rotation and churn in very short periods of time. And it may not be a surprise if we are probably poised for another kind of sector rotation. And in that regard, we've seen some of the performance come out of the sector, and maybe we have also seen some good numbers come up pre festive season demand. We might have to probably worry about what happens next, and especially if, like as I mentioned, if India's overall interest rate cycle probably looks a little more elevated than what it was before.
So, Taher, with that view, what are you doing at the margin? Incrementally, what are you looking to do?
So incrementally, we've had this bent towards domestic stories for a reasonably good length of time now, since the start of this year or maybe last year, and that's playing out pretty well. And it still has a fair bit of legs because we will see decent amount of earnings growth come about. But they've also been equally rewarded during the course of the year, and just out of sheer sector rotation and the fact that at the margin, it looks like India's terminal rate. Rate may not probably be as much as, I mean, it could be higher than what we probably initially thought, like as mentioned earlier. And if that were to happen, then some bit of, I mean, in the season of rotation, I would not be surprised if we see some rotation out of some of the domestic sectors into some of the other defensives, or maybe even global sectors for that matter. Right now the developed markets are trying to engineer a slowdown in their economies in order to bring inflation under control. And if that were to come to pass, I'm not sure if entirely we are kind of insulated. We did have a fair bit of impulses come out of the global stimulus, and commodities doing well, commodity companies doing well, some of the engineering parts, etc., doing very well in the rebound. If that were to kind of ease off, then it may have at the margin some repercussions for our domestic growth cycle, and that perhaps at the margin is what I worry about, and maybe that could cause that next round of sector rotation.
What about IT space, Taher? Are you selectively adding now, or do you think this whole macro reset perhaps has more legs to go in terms of the valuations?
So I think it's turning into steadily turning into a value opportunity. We don't really have a reason to significantly rush in as far as the IT sector is concerned. But I view it more like a counter-intuitive play. I mean, at the end of last year, when most companies were indicating at reasonably good trends and continuing strength in commentaries, I think that was a time when probably things were looking really tougher for the sector as such, and now we are seeing some giveaways in terms of softening in the sector, and maybe probably counterintuitively this might probably be the time to actually look at this sector more constructively, at least from a medium-term perspective, if not the next 2 quarters. So I would be, net a little more constructively inclined. But like as I said, I mean, there's no urgent need to rush into this sector as well. Immediately, triggers are not clearly visible. But yes, I mean, clearly pockets of value are emerging in this sector.
We just want to point out, Sonia, before you ask the next question, the Nifty is now above 17,200. And the last bit of rally is because of the IT stock. So they are also joining in. The Bank Nifty, of course, is approaching 1,000-point rally now, almost 39,000. And the Nifty is now above 17,200. So could be very interesting, dear.
Okay, let's see. Just when you start the party, right? Well, I mean, of course, it is very volatile times across the world. So the rally has been pretty significant, the pullback. Let's see if that lasts or not. But Taher, I wanted your thoughts. You were telling us how you're quite bullish on the auto space. The auto financiers have done very well too. I mean, M&M Finance this morning is trending higher by about 9%. Asset quality has improved. The others, whether it's Chola, Shriram, have also done quite well. Is this a space that you like?
Well, we're not playing pure auto financiers, but we do have a few banks which are relatively more, prominent as far as the auto financing space is concerned. So we like them from that perspective, especially because it gives them a little bit of that pricing power in an environment where rates are moving up and deposits are cost of funds may probably go up. So I think that's a good space to have as a combination within in case of banks which are more levered to that, and that gives a little bit of that mix benefit. But we are not, as of now, playing the pure financiers at this stage. I mean, we are cognizant of the fact that there is a fair bit of competition in this area.
Okay, well, since we spoke about autos and auto ancillaries, we're going to take it from there. Thanks a lot, Taher, for joining us, and would invite you to listen in to the next conversation.